Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm gonna do an update on Dropbox, which has done pretty well during the last week and it has closed on Friday during the after hour, reached a price of above $24 per share. Considering that the stock was trading very near $20, sometimes even below $20 over the last 10 days, this is a 20% return. And it is great from a company which is still below $10 billion, as we can see from here, around 9.3 billion. So probably many of you are asking, is this the beginning of a new bull cycle actually for Dropbox, which since IPO has always been below its IPO price, and so it is now time to buy. And what has changed from my previous analysis, if something has changed? So we are gonna see all of that. As always guys, the only thing I ask you is please leave me a like, it's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. So if you remember from my previous analysis that I did on Dropbox, I was talking about a catalyst. And why I was talking about a catalyst basically? Because Dropbox, differently from other companies which are basically just set up to grow without any problems, a Dropbox is not like that. Dropbox need a catalyst, need something to happen. And why is that? Because as we can see, if you remember from the previous video, we saw that the revenues growth actually went down. It is pretty simple to see it also from the quarterly basis graph. It is even easier to see it from this graph actually, where we can see the percentage of growth over the last 3 years from Q2 2017, and it has been a consistent downtrend. The yellow line is pretty clear, and the estimates for 2021 are actually just a 10% growth for Dropbox as of now. So considering that the cloud and work from home business sector it's growing at nearly 20% each year, that means Dropbox obviously it's losing market share. I've talked about it in my previous video, where what was and what is the main problem of Dropbox, and that was it basically. 600 plus million users, and just 2.5% of those users are paying users, because people in the past didn't need to pay for Dropbox. In the beginning, Dropbox was understood by all people all around the world mainly as just a cloud business, just something to store your data in. And what was the problem about it, and what is the problem about it, is that Dropbox, considering the measures of the company, the size of the company, is not able to fight against the competitors. Okay, so when you have, for example, Google, you have Google Drive, and they offers for free 15 gigabytes, while Dropbox is only able to offer 2. And so what happens is that people just use it for 2 gigabytes, and then when they need to pay for more, they just switch and they go to Google, because it doesn't make sense to pay Dropbox when Google offers you that much. But it's not just Google, because you have Amazon, Microsoft, you have a lot of them, and it is a very competitive environment. So over the last years, Dropbox has not been able to increase this blue piece of cake, okay, in this graph. That was the main problem. The revenues obviously didn't go up that much compared to different companies in the environment, and obviously investors were not happy about it, and the stock just went down, okay, never came back to the IPO price, and that's something bad. So why I talked about a catalyst in the previous video? Because in this situation we need something that will push this yellow arrow, which is a negative, very clear, in the opposite direction. So I want to see something like that, okay, the growth rate to actually change direction and continue to increase, at least with the pace very near the 20% growth rate of this sector. okay, so that Dropbox can maintain the market share. Dropbox, over the last period, they have realized that just the cloud business was not enough, and they have tried to build a workstation. They have tried to build something which has a lot of things in it. We have seen, for example, the acquisition of HelloSign, which is the second largest and most important software to sign documents online. They have tried to create something, a platform, which is very friendly with older softwares, so it can work with basically everything, Microsoft, Google, all you have in mind. And their idea was trying to actually increase the percentage of the paying users compared to the total users, because these users, they should realize that Dropbox is not just a cloud business. If that works and they are able to increase this piece of cake, then everything will change. Why the stock price went up? We can see, this is from Seeking Alpha, we have seen that Salesforce acquired Slack, near $30 billion actually, 27 point something. And the thing is that there are rumors that Dropbox could be a target company for a future acquisition. So it is a very competitive environment. You have big companies and then you have smaller companies. And it is very common in these new growing sectors that big companies, they tend to acquire smaller companies to gain market share and to try to amplify the offer that they do. So if you acquire Dropbox, you will be able to do what Dropbox does, so you can have more services available for your company, and obviously you reduce the competition side. So Dropbox, probably there are rumors that it could be a target company for a new acquisition. However, this is very important. The information is just brainstorming logical deals and not reporting any specific deal news. So basically, this was just an idea. But this idea has been enough to actually push Dropbox stock price higher. So this, in my opinion, has two different meanings. Now, the first one is that the rise in the stock price that we have just seen may not be something that can last for long. And why is that? Because according to the article, it is just rumors. Just rumors. Probably they will say now, okay, we don't want to acquire Dropbox, and then the stock price, boom, will come back to where it was. The second meaning of all of that, which I like it more, is that when a company trying to find target companies to buy, they usually define those companies which they like. If you want to acquire a company and include it in your business, you have to like the company. And what I mean by that is that probably these bigger companies, they are starting to realize what Dropbox can be capable of. Probably they are starting to realize that trying to build a workstation and trying to include as many businesses as possible in a single pack and not just the cloud business, it is something interesting. And so thinking about acquiring Dropbox and including in your business would be something interesting, because usually when you define a target company to buy, you define something which is undervalued at the moment but has potential. Okay, if you don't see potential, you don't buy it, you don't care about it. So this thing, and it is related to my previous analysis that I did about that catalyst. If they see that Dropbox can actually change the past, move this arrow in growth higher, then we can see the stock price really going up. Obviously, when we take a look at the valuation that I've done, I have adjusted it a little bit, just including a couple of stuff. In the previous video, that was around 29.5. At this moment, I find a fair price of 30.89. If we consider a possible acquisition, I would say that usually they add a premium on that fair price when you want to do an acquisition. So we could see that going up at least until 35 36. But remember, it is not a deal. It was just a brainstorming, okay? So it is not something that it is true and we know for sure that is gonna happen. However, I think that what's important is that Dropbox actually is passing from being something that no one really care about to something that probably people are starting to realize that it can be interesting, okay, going in the future. So if that catalyst happens, if consumers start to understand that the workstation offered by Dropbox allows you to do many different things, and especially if you are a small business, okay, because big businesses, they have their things, they have major contracts with Microsoft, so they don't care about Dropbox. But for small companies, getting this slice of the cake bigger, we can change the growth rate of Dropbox. So that's why in the valuation I have done from a 13% to a 20%, which is basically the rate that the sector is growing. In this valuation, I assumed that this kind of catalyst would happen for Dropbox. What I find is that with a price to sales ratio on average from 3.8 to 5.5, that was the fair price of the company. At that point, we were below 20, so when I did that video, it was 19 point something, and it was very underpriced. So, as I told you also in my best stocks for December, I bought Dropbox around 20.12 cents, and I'm still holding it. However, the next couple of quarters for Dropbox will be very important, will be absolutely something to really pay attention to, because if they're able to change something, if people start to realize that Dropbox is interesting, in my opinion, has to happen in the short term. Okay, now usually I look at the long term for these companies. However, this is not a company which is set to grow exponentially. This is a company where something has to happen. And if we don't see that in the short term, so in the next at least 4 or 5 months, well, then I will start to be quite worried about Dropbox. As of now, I remain invested. The bet is that they will be able to push that growth rate higher. 10% is ridiculous considering the market that they are in. And now here I put a valuation with a 10% growth rate. So with the same price to sales ratio, we have a fair price today of around 26, so very near where the stock it is now. If they maintain this growth rate even so low compared to the sector, it is very easy that they will lose a lot of market share, so that this growth rate can become even 9%, 8%. So you realize that in that situation, Dropbox will be a very bad investment for the future. So that's why I'm remaining invested, but I want to pay really attention to the next couple of earnings calls. I want to see a change. I want to see that users realize and start to use Dropbox as not just a cloud business, but they start to pay the platform and the services because it is something useful. So that's what I would like to see, and that's why at the moment I continue to be invested in Dropbox. However, just remember guys, this is not like it was, for example, Google in 2010 and then Facebook as well in 2014. This is something that if it wants to grow, we have to see a change, a definitely change from the very ridiculous growth rates that we are seeing right now. So this is the bet you're doing. It is quite a risky bet, but I think that if you have entered very near or below $20, it is something to hold. In terms of this acquisition, honestly, I will not put too much attention on it. And if I see the stock coming back because this was just a rumor, brainstorming, and not a real news, well, that would be pretty normal, okay? But I will continue to hold it until the next couple of earnings. At that point, if I don't see anything changing, then I'm gonna drop the stock. So I give it a little bit of time to actually let me see something that it is changing, okay? That catalyst to actually happen. So this is the end of the video, guys. I hope you find it interesting, and please leave me a like and leave me a comment below. Tell me, what do you think about Dropbox? Have you bought it below 20 or not? And subscribe to the channel, and as always guys, have a wonderful day.